Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing, precisely the non-commercials in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, the rejection to the upside the market has been creating away from this quite strong horizontal historical support area has been continuing. In fact, it is now quite a few months in a row that we continue to see this rejection to the upside away from this level. And anyway, this makes a lot of sense because this level was a very strong structure level for this market that was already acting as resistance starting from here, from which all these previous rejections to the downside were created. Then the market broke above that zone and all that previous resistance was turned support here. The market tested the level and respected it as previous resistance turned support, because what we know is that in the market, previous resistance, once it is broken to the upside, becomes support. And since then, the market has continued rejecting that level to the upside. And until this will remain the case, we could simply expect to see more bullish price action being created away from this level. So the monthly time frame does seem quite bullish. And until the price action will be like the one that we have right now, we could continue to expect more potential bullish continuation. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, there is just now a quite important structure change which happened. In fact, what we can notice here if we look closely is that we had the creation of a range for quite a few weeks. In fact, we can notice how the market was ranging in between these two levels of resistance and support. However, now we just had the breakout to the upside away from this range. And we also already saw a break, retest, and rejection to the upside, because this green candle here was the first candle which closed above the range. And after a level gets broken to the upside and we see a close above that level, if that level was a previous resistance zone, at that point, it becomes support, because previous resistance becomes support in the market. And we have seen that already on the monthly time frame. The same exact concept applies also here on the weekly time frame. So the market here retested the level as previous weekly resistance turned support, and it is currently in the process of rejecting that level to the upside. We can already see how the market has started rejecting the zone to the upside. So in a situation like this, more bullish price action could be expected away from this level as well. Dropping down on the daily time frame, what do we see? Well, from a daily standpoint, that is where things get very interesting. I also spoke about gold quite a few times in the past, and just a few days ago when the market was around this area, I explained all the reasons for which we could expect this rejection to the upside, which is in fact exactly what the market just did. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. Now, at the moment, if we have to identify the structure that we have here on the daily time frame, the easiest thing that we can do is look at what kind of highs and lows the market has been creating. And it is very simple to identify how this level is currently acting as previous daily resistance from which all these previous rejections to the downside were created, which now that the market has broken it to the upside is turned support here. Now, there's also another very important thing that we can notice. Since we have an impulse and now the start of a correction, if we want to measure a correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32, 50% and 0.618 Fibonacci retracements all lining up exactly at this area. Now, since this zone is also the previous horizontal resistance turn support, this actually creates confluence of support inside of this level because we have both the horizontal level of structure and the Fibonacci levels lining up in the same area of price, which creates confluence of support. And inside of a confluence of support zone, there is an increased probability of seeing institutional longing. Now, speaking about institutional longing, let's go and see what we have when it comes to the commitment of traders. So what hedge funds and the big players in the market are doing. Now, if we look at the data precisely for gold, we can see how with the last report, we have just seen an increase of the net positions, quite strong increase of the net positioning from 238K all the way up to 267K. So as institutions are moving back to the bullish side for gold, there is definitely the possibility of seeing more potential bullish price action being created, since already we see 30,000 longs added with the last report from an institutional perspective, bringing the total longs at 328K compared to only 61K on the institutional side of the market. So way more longs than shorts. So let's keep this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily standpoint, in this case, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would correct to this area and shift from an intraday bearish to bullish market, at that point there is a good probability of seeing more institutional longing inside of this zone, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. So if we get this retest and continuation to the upside, that definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire all-inclusive mentorship program. This is the most complete all-inclusive mentorship program. You will see here a complete presentation of everything included, which is essentially all my courses, including the programming course on automated algorithmic trading. You also have the possibility to gain access to one-on-one private mentoring, all included in the mentorship program, the trading station software with the Telegram signals notification, and also the COT data software, which is essentially the one that we just used in this analysis. So everything all for lifetime access. And if you continue to scroll down, you will see that you will have the possibility after the testimonials to join and gain automatically access with the email and password that you will create during the sign up process. So I really suggest at least to go and check it out at transparentfxtrading.com. You find the link also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.